the Coppock curve indicator. It is based on ROC, rate of change indicator, and basically they both show whether the trend for the asset or the index is bearish or bullish at the moment. And for example, if ROC is crossing the zero level from the bottom, it means that the bearish trend is changing to bullish trend, and as soon as the indicator is above zero, it means that the price is going up, and if the indicator is below zero, then the price is tend to be going down. The same is applied to the Coppock curve, and basically what is ROC is the difference between the current price and the price n periods ago divided by the price of any n periods ago. So n usually multiplied by 100, so it is in percent. So basically it shows how much price changed over a certain period of time, and sort of what is the rate of this change. That's why it is called ROC, rate of change. And for the Coppock curve, it's basically very similar. It uses 14 period ROC and 11 period ROC weighted by weighted moving average with 10 periods. And usually those numbers are default numbers for the Coppock curve. But the point is, the Coppock curve initially was used for ETFs, and those are much slower, of course, than Bitcoin. Bitcoin is very fast. So we would like to change the settings in a way that it will better represent the dynamics of Bitcoin. So again, let's switch to monthly chart, because those settings which we mentioned were used on the monthly time frame. Let's look at the previous bottom around here on 14th, 15th, and you can see how the indicators behaved at this area. So let's look at the Coppock curve. We have this intersection of the Coppock curve and the zero line at somewhere around February 16th, so like 1 year later the real bottom of the price here. Of course, there was like accumulation period and so on, but we would like to make it indicating a little bit closer to the point where the bear market stopped, and we have the accumulation phase and then going up. So we would have to adjust those settings. Pretty much the same we can find for ROC, so you can see this intersection in September 15th. So again, we would have to change the settings. So I would switch to the daily chart because it would be easier to multiply the numbers instead of dividing them on the monthly chart. So let's return back in 15th year. There you go. So you see on the daily chart there's basically a lot of the signals, and it's mostly applied for the faster time frames. So you can actually increase it by 30, and in this way you will have it like very similar to the monthly chart and you would see that this intersection was in February 16th, so pretty much the same as for the monthly chart. Now let's try to make this intersection somewhere closer to the bottom, somewhere at the beginning of the accumulation phase, by making this period smaller. So I'll just go ahead and divide it by 10, so it will be like this. And you see that it's still quite a few of the signals, so it means that the time frame which you would be using this is much faster than we would like to have. So let's try to increase it like twice. It will be 60, 84, 66. Okay, it seems better, but still we have too many intersections, so I will go ahead and multiply it by 2 once again. So 120, 168 and 132. Okay, and this is already a bit better. So what you can see is this is now in September, this intersection, but moreover, what is interesting, this bottom of this indicator is very close to the bottom of the price, and then this indicator started to go up. So this lowest point was very close to here, and actually after that the price almost didn't move. So it was like it was a channel of the price, and the price was sort of an accumulation phase, and then after that we started to see some increase, and like in the end of 2015 we saw a dramatic change in the price and going up and up and up. So you would expect that somewhere here this accumulation phase was over and the price started to go up, and that's exactly what we see by this intersection of this indicator with the zero level. So it seems like those settings are pretty reasonable. So I will go ahead and switch the ROC to the same coefficient will be 12, because if you remember, the length of weighted moving average was 10, so 120 is factor of 12. So I will increase, and the rest also was used the same coefficient, so I will increase it by 12, it will be 108. So, and you could see that it's pretty much similar with Coppock curve, that you have this in switching from the bearish to bullish area around September, and also this was still accumulation phase. So when the ROC is hovering around 0, it means that we are in a consolidation at some point. So very, very indicative. So now let's look at how those indicators look at our condition right now when we have this possibly accumulation phase after the bottom in December 2018. So, and you can see that on the Coppock curve, situation is very, very similar. So we had in February, we had the lowest point of the Coppock curve, and we started to see increase of its value the same way that it happened in 2015. Also, ROC is now above 0 level, just first time from October 2018, when we have this little pullbacks, but price couldn't hold, so we returned back. So this was pretty much still bearish, and this was a huge bearish area, and after this long bearish area we started finally to see the ROC moving around this 0 level, which again indicating the accumulation phase. And now, since we're like above it, it's very likely that we'll stay above that. Well, of course we can return back and repeat something which we had here if the price will go like to those $2,000, something like that. But it's very high chance that this indication is not false, but we will have a chance to go higher. So, and this is exactly what we see by the Coppock curve, because it is basically the smooth version of ROC. So concluding, first thing, that we need to adjust the parameters of the indicators which we use, of course, because Bitcoin is very different from the traditional markets. And second thing is that we have another indicator. Of course, all of them are very similar. They are all based on the price, how it moves, but they still have specific features which either remove the noise of the price fluctuations, or maybe show some hidden changes in the trend. And by the way, the Coppock curve and ROC is very useful in finding divergences, and those things are usually hidden by the price itself. So I hope it was useful and interesting. See you tomorrow in the next video. Thank you for watching.